China's economic rise has been nothing short of remarkable. For decades, the nation transformed from a poor agrarian society into a global economic powerhouse. This transformation was fueled by a skilled labor force, foreign investment, and a government committed to economic development. The Chinese economy boomed, lifting millions out of poverty and propelling the nation onto the world stage. New cities rose, connected by high-speed railways, highways, and airports. Factories sprang up, churning out goods for consumers worldwide. However, this remarkable growth came at a cost. The Chinese economic miracle was built on a foundation of debt, much of it incurred to fund ambitious infrastructure projects. As the debt piled up, concerns grew about the sustainability of China's economic model. China's infrastructure boom was a sight to behold. Gleaming new cities rose, connected by high-speed rail lines, modern highways, and state-of-the-art airports. The country's infrastructure was the envy of the world, a symbol of its newfound economic might. However, this growth model had a dark side. Much of this development was financed through debt, with local governments borrowing heavily. As the pace of economic growth slowed, concerns grew about the sustainability of this model. The reliance on debt-fueled infrastructure spending created imbalances in the Chinese economy. It led to overcapacity in sectors like steel and cement, as local governments prioritized short-term GDP growth. This misallocation of capital further exacerbated the debt problem, as many projects failed to generate expected returns. Fueled by easy credit and speculative fervor, China's real estate market experienced an unprecedented boom. Property prices soared, driven by genuine demand and speculative investment. Developers, flush with cash, embarked on a construction frenzy. Entire new cities sprang up, often on speculation, with little regard for actual demand. This speculative bubble had dangerous consequences, inflating asset prices to unsustainable levels. The government tried to cool the market, but it was too late. The bubble burst and property prices plummeted. Construction projects stalled, leaving behind unfinished buildings and ghostly, empty cities. The collapse of the real estate bubble had a devastating impact on the Chinese financial system. The economic miracle had promised prosperity and upward mobility for millions of Chinese citizens. The middle class swelled in size, fueled by rising incomes and access to education and opportunities. They embraced consumerism, driving economic growth. However, the economic downturn hit the middle class particularly hard. We poured our life savings into property, believing it was a safe investment. Now, with the market collapse, our savings are gone, and we are trapped in debt. The promise of upward mobility through home ownership turned into a nightmare. The economic anxieties of the middle class were compounded by rising costs of living, stagnant wages, and a shrinking job market. The social contract that had underpinned China's economic rise began to fray. As the Chinese economy sputtered, young people bore the brunt of the downturn. Graduating into a job market flooded with applicants and starved for opportunities, many young Chinese faced a bleak future. The unemployment rate for those aged 16 to 24 soared to unprecedented levels. This generation, raised on the promise of a brighter future, found themselves staring into an abyss of economic uncertainty. Disillusionment and resentment festered, leading to a profound sense of apathy and hopelessness. Some young people retreated from societal pressures, embracing the lying flat movement, a form of passive resistance. They opted out of the rat race, choosing to prioritize personal fulfillment over societal expectations. Others turned to social media to vent their frustrations, expressing their anxieties and criticizing the government's handling of the economic crisis. The economic turmoil in China sent shockwaves through the global economy. As the world's second-largest economy, China's slowdown had far-reaching consequences. The interconnected nature of the global economy meant that China's problems quickly became the world's problems. One of the most immediate impacts was felt in international trade. China's voracious appetite for raw materials and manufactured goods had driven growth in many countries. As Chinese demand waned, prices for these commodities plummeted, hurting exporters. The manufacturing sector, heavily reliant on Chinese demand, also felt the pain. Factories around the world faced order cancellations and declining profits. The crisis in China exposed the vulnerabilities of global supply chains, highlighting the need for diversification and resilience. As the economic crisis deepened and social unrest simmered, the Chinese government responded with increased repression and control. Fearful of instability, the government moved swiftly to silence dissent and censor information. The Chinese Communist Party, having staked its legitimacy on delivering economic growth, viewed the growing unrest with alarm. They cracked down on any form of dissent, whether online or offline. Social media platforms were subjected to intensified censorship. Posts critical of the government or highlighting the plight of the unemployed were swiftly deleted. The government's vast surveillance apparatus was further enhanced, allowing them to monitor potential troublemakers. Independent media outlets faced increased pressure and intimidation. The flow of information was tightly controlled, ensuring that the official narrative remained unchallenged. As China grapples with the consequences of its economic missteps, the future remains uncertain. The once unstoppable engine of growth has sputtered, leaving behind a trail of shattered dreams and simmering discontent. The path forward is fraught with risks. The government's instinct to double down on repression may quell dissent in the short term, but will likely exacerbate the underlying problems in the long run. Stifling innovation and critical thinking will hinder China's ability to adapt to a rapidly changing world. Addressing the debt overhang and transitioning to a more sustainable growth model will require difficult choices and structural adjustments. It will necessitate a shift away from the state-led, export-oriented model towards a more balanced approach that prioritizes domestic consumption and innovation. The government's ability to restore faith in the system will be crucial in determining whether China can emerge from this crisis stronger. The economic crisis gripping China marks a turning point, not just for the country itself, but for the world as a whole. The era of unbridled Chinese growth is over. The world must now contend with a more uncertain and volatile China. This new era presents both challenges and opportunities. The global economy must adapt to a period of slower growth and increased uncertainty. However, this period of transition also presents an opportunity to forge a more balanced and sustainable global economic order. It is an opportunity to address the imbalances that have characterized the global economy and build a more equitable system for the future. The choices that China makes in the coming years will have profound consequences for the world.